As we go through Europe, we just wanted to kick off with passenger car registrations, just to look at what is the consumer doing, buying obviously one of the biggest items. And typically there's a seasonal slowdown, so nothing surprising to see. It's just here you can see that it's the lowest it's been going back through 2015, which speaks more to some of the slowdowns that we continue to talk about and see within Europe, and some of those overhangs that, again, are permeating the system when you look at just GDP growth, economic prowess in general, and just why we think there's going to be some of that overhang when we look at what are estimates looking at, what we're doing, what is the expectations going forward, and how that's going to continue to kind of weigh on things. And that leads us to industrial production, because when you look at Euro area, EU, you're starting to see that come back to some sort of normalcy on a pre-COVID level. And it's just a matter of where is that industrial production going, at what price, and how is that moving through the system. Which is then when we turn to industrial production in July, you can see that the EU is back at percent change, you're back to just about 9%. Euro area is slowing down a bit. And this is the caveat between the EU and the Euro area, and where things are moving, who is driving some of that growth, which is when you can see some of the different backdrops on some areas that are seeing some industrial production increases, but on a slower end, especially France. If you look to the right of that chart, you can see some of that overhang again coming from France. And then obviously Germany is a much bigger part of where is that growth going to be, and you can see it's still to the right. So Germany is going to be that driver, which we continue to say it's still going to grow. It's just not going to be at the rates that I think the market expects or needs to see that expansion. So then when we look at producer price index, here's an example of why. So Germany producer prices month over month was at 1.5. And then when you look at year over year, you can see it's at 12%. And it's just walking up that wall. And that's what we continue to talk about, where prices are coming through. There's more increases coming. Just when you look down the supply chain, look at imports, look at costs, look at all of those pieces, where it's going to continue to be this overhang, and it's a matter of how much of that can get pushed through, how much of it gets left behind. And again, these are some of those pieces that we continue to see as a underlying problem. And then Germany, value of monthly car output, you can get an idea of just where that value is, because industrial output in motor vehicles has been coming down, and where we're seeing some of these pressure points, because the value of monthly car output, it's just because they're not making as many cars, because they physically can't do it based on the amount of raw materials that are there, and some of the slowdowns that we're seeing, where people are still trying to buy cars, but they're getting expensive, and they're starting to see some of this balking, if you will, at what is going to be available going forward. So then when you look at the inflation side, well, we're seeing those increasing costs on the car side, on the industrial production side. We keep seeing PPI just going higher. And here is more examples where inflation, non-energy goods contributed a bigger percentage versus essentially only one other time it showed this, and realistically it's the highest it's been since January of 2018. And the non-energy goods side, that is where we get some of the stickiness, that is where we get some of that pressure. And that non-energy goods, when you look at that lower chart, you can see that big spike, and how, because we like to blame energy as WTI is at 72 and gasoline is up and diesel is up, but you can see that there is more to that. There is more stickiness that's going to remain, especially when we look at food prices and some of these other things, as global PPI goes up, and it's just going to continue to push this and just keep it elevated, acting as an overhang to growth. So then when we look at hiring, so hiring in hospitality and recreation, so you had this strong move on a reopening, but now you're falling right back down. And that's a bit of a concern, because what is this recovery built on? And we continue to see just glimpses of how it's really slowing down. Some spots obviously more aggressive than others, especially when you look at hotels, cafes. But there's you got this big shot in the arm, and now it's starting to cool down at a much faster clip. And again, these are things that are leading to more and more problems. as we go to where are those estimates on growth? Where is growth going to be as we go into Q4 and into Q1 of 2022? And inflation adjusted income from savings deposits, you can see, are firmly negative. So people are, again, just losing money, keeping it in savings. And that's just, again, a natural drag on, well, how am I going to get ahead? It doesn't make sense to save for a house, so I have to be invested. But what am I going to invest in? Where are rate? And that's where you keep getting people, YOLOing on calls and going into riskier and riskier assets because it doesn't make sense to keep it in a bank. And you continue to see that overhang as people then go into the market. And then as the inflation in the area continues to drive higher, that again, it's because remember, it's inflation adjusted, and you're seeing as inflation is going up, more of that is getting passed through at a slower rate than the US. So that's the other thing. Europe has more room to try to push something through. The question is, can they, given where the consumer is, because the consumer is much worse off, or at least, relatively speaking, versus the U.S. consumer, which again provides some of that overhang that we've discussed and talked about previously. And then when you look at that Eurozone manufacturing inventories, there's inventories at a low. They're starting to bounce, but this is some benefit because the inventories will have to be replenished. You'll start to see some of this growth coming back, and that will provide some of this uplift. But it's not going to be quick. The consumer's still struggling, still slow, and the supply is going to be such an issue because, again, you're further from different areas. You have to get it to where it is. The costs are going up. So there's a different dynamic involved, which is similar but different versus the U.S. and other areas. But some of this inventory rebuild will also provide some uplift, some backlog. But again, it's going to come on the back of a slower consumer and companies trying to rebuild. So again, there's a lot to talk about. We'll discuss some of this more next week when we have a bit more data, because there's going to be some more coming out. But now we're going to go into and talk about Evergrande and some of the things that are happening in China, some of the growth issues and growth profiles as we talk about Asia and China specifically.